If you're renting right now and wondering, how on earth can I afford to buy a home in today's market? I get it. You're not alone. Buying your first home is one of the most exciting and sometimes overwhelming experience of your life. But here's good news. It's totally achievable. Today, I'm going to walk you through a full step-by-step guide on how to go from renter to homeowner. We'll cover everything from saving for a down payment to using government programs to understanding mortgages and even choosing the right kind of home for your budget and your lifestyle. By the end, you will have a clear plan, one that fits you, your goals, and your future here in Ottawa. So grab a coffee, maybe a notepad, and let's get started. Let's start with why homeownership is such a powerful goal. For many Canadians, owning a home isn't just about the bricks and mortar, it's about pride, independence, and also stability. When you own your home, you are in control. You decide what color to paint the walls, whether to renovate the kitchen, or even if you want to get that adorable dog you've been talking about. There's no landlord increasing your rent or telling you what you can and can't do. Every improvement you make adds value for you. Financially, it's one of the smartest moves you can make. Each mortgage payment builds equity. That's the portion of your home you truly own. Over time, as property values appreciate and your mortgage balance goes down, your equity grows. And that's wealth you can use later in life, whether to upgrade your home, invest, or even fund your retirement. And in a city like Ottawa, where real estate tends to be pretty steady and stable, that equity can grow faster than you might expect. Home ownership is also emotional. It's the security of knowing you've built something that's truly yours. It's where your family memories are made, where you celebrate holidays, and where you feel rooted. So, yes, it's an investment in your finances, but also in your future happiness and stability. Let's start by developing a culture of savings. Now, before we talk about down payments or mortgages, let's talk about saving. If you want to buy your first home, you need to get comfortable with saving, not just as a one-time thing for your down payment, but as part of your everyday mindset. Start small, but start now. Think of saving as training for home ownership. It builds the financial discipline, it helps you plan ahead, and shows lenders that you're ready to manage the responsibility of owning a home. A good way to start is by tracking where your money is actually going. For 1 month, write down every expense from your groceries to gas to takeout coffees and also your online shopping. You'll probably find a few areas where you can trim without really feeling it. Let's say you save $150 a month by cutting back on the little extras. That's $1,800 a year. Over a few years, that becomes your down payment or even your closing costs. Banks love to see consistent saving habit. It tells them you're financially stable, and that could help you qualify for better mortgage terms later. It's not about depriving yourself, it's about prioritizing what matters most to you, and that should be your future home. Let's talk about how to automate your savings. Here's a trick that's simple, but so powerful. Make your saving habit automatic. Set up an automatic transfer from your checking account to a dedicated home savings account every payday. Even if it's $100, $200, or $300 a month, you set it, you forget it, and let it build quietly in the background. And when you automate it, you're paying yourself first. Before you pay bills, before you spend, you're investing in you. This approach is how a lot of my clients surprise themselves. They check their account after a few months and realize, wow, I've actually saved thousands without even thinking about it. It's automated. You don't see it, out of sight, out of mind. You can even nickname your account something like my first home fund. It keeps the goal top of mind and it makes it feel real. If you're using a high interest savings account or a tax free savings account, we'll talk about that a little bit later, your money can also earn a little extra along the way. The earlier you start, the faster you'll reach that down payment target. And that's the key to unlocking the next step. Now, let's talk about one of the most powerful tools for first time homebuyers in Canada, the Home Buyers Plan, the HBP. This program allows you to withdraw up to $35,000 from your RRSP tax-free to use towards your first home. And if you're buying with a partner, that's up to $70,000 combined. What's the catch? The funds have to be in your RRSPs for at least 90 days, and you need to pay it back over the next 15 years. But remember, you are paying yourself back. Here's why it's such a great option. Instead of borrowing that down payment from a lender at interest, you're using your own savings to get into the market a little bit faster. Think of it as giving your future self a boost. And if you've been contributing to an RSP through work or on your own, you might already have the funds you need just sitting there. You just haven't thought of it as part of your homeownership strategy just yet. Here's a little pro tip. Talk to your financial advisor before withdrawing to make sure it fits with your overall plan. But for many first-time home buyers, this is a game changer. All right, let's talk about another smart saving strategy, the tax advantage accounts. If you open a tax-free savings account, you will hear that term all the time, the TFSA, you can contribute up to $7,000 a year as of 2025, and any growth inside that account is completely tax-free. That means the interest, the dividends, or investment gains, they're all yours to keep. No taxes when you withdraw the money, even if it's for your home. Even better, there's a newer program. It's called the First Home Savings Account, the FHSA. This one is specifically designed for the first-time home buyers. You can contribute up to $8,000 per year, up to a lifetime maximum of $40,000, and those contributions are tax deductible. It's basically like an RRSP going in and a TFSA coming out, the best of both worlds. You can even combine your FHSA with your RRSP homebuyers plan to maximize your down payment power. So if you're serious about buying, talk to your bank or financial advisor about opening both. It's free money in the form of tax savings, and it adds up a lot faster than you might think. Now let's talk about mortgages, one of the biggest decisions you'll make as a homeowner. Mortgages can sound a little bit intimidating, but once you understand the basics, they're not that scary. There are two main types of mortgages, a fixed rate mortgage and a variable rate mortgage. So a fixed rate mortgage means that your interest rate and monthly payments stay the same for the entire term, usually between 3 and 5 years. This gives you the stability and peace of mind, especially if you're on a tight budget. A variable rate mortgage moves with the market. When the Bank of Canada adjusts their rates, your payments can change. Historically, variable rates often save people money over time, but they do carry a little bit more of a risk. You'll choose the amortization period, typically 25 or 30 years. A longer amortization means lower monthly payments, which can help the first-time home buyers qualify a little bit easier. Here's my advice. Talk to a good mortgage broker, someone who can break it down for your specific situation. If you don't have someone to talk to, let me know. I have many great mortgage brokers that have helped many of my clients. They will sit down and explain your options, help you understand the pre-approval process, and show how much you can comfortably afford, not just what the bank says you can. Your first home doesn't have to be your forever home. Chances are it won't be. So now let's talk about expectations. So many first-time home buyers tell me, I'm waiting until I can afford my dream home. But here is the truth. Your first home does not have to be your forever home. The goal is to get into the market sooner than later. Start with something you can comfortably afford. Maybe it's a smaller townhouse or a condo or a single family home in a growing neighborhood, maybe a little bit more out of town like Rockland, Limoges, or even Barhaven. Over time, you can build equity and your income increases, and then you can trade up. I've seen it so many times. Clients buy their first condo, they live there 3 to 5 years, and then they use their equity to buy their dream home with a bigger down payment. Think of your first home as your stepping stone into the market. It's not about perfection, it's about progression. What about the power of sweat equity? Here's something that can really accelerate your financial growth, a little bit of sweat equity. That means buying a property that might need a little bit of work, nothing major, just some TLC, and putting in effort to add value to this property. Maybe you repaint, refinish the floors, or update the kitchen over time. It does not have to be done within 24 hours of you moving in. These improvements can add thousands to your home's value without huge costs. Just be realistic. Always get a proper home inspection before buying and make sure any repairs are within your skill set and your budget. But if you love a good weekend project, this can be an amazing way to build equity a little bit faster and make the home truly yours. Just make sure you don't get in over your head. Let's look at the big picture. Now let's talk about something a lot of first-time home buyers overlook: the ongoing cost of homeownership. When something breaks, there's no landlord to call. You'll need to budget for maintenance, property taxes, home insurance, utilities, and condo fees if you're buying a condo. A good rule of thumb is to set aside about 1 to 2% of your home's value each year for regular maintenance and repairs. So if your home is worth $500,000, plan for approximately between $5,000 to $10,000 per year in upkeep. It might not all get used every year, but it's there when you need it for a new roof, furnace, or unexpected potential plumbing issues, electrical issues. Owning a home is incredibly rewarding, but being financially prepared makes the experience so much smoother. So let's recap. Build a habit of savings. Make sure you automate this new habit. Use government programs like the HBP, TFSA, and the FHSA. Understand your mortgage options. Start small, build equity, and move up when the time is right. Remember, buying your first home isn't about timing the market perfectly. It's about being ready when the right opportunity comes along. And that's where I come in. If you're thinking about buying your first home here in Ottawa, reach out to me. I'll walk you through the process, connect you with trusted mortgage professionals, and help you find the right home that fits both your lifestyle and your budget. This is one of the biggest milestones of your life, and I would be honored to help you take that step with confidence. Thanks for taking the time to watch this video. If you found it helpful, feel free to share it, hit the thumbs up, and don't forget to drop a comment below, letting me know what the biggest struggle is for you to move forward on your home purchase. And don't forget to subscribe to my YouTube channel for more straight talk on real estate. I will see you in the next video, but in the meantime, if you have any questions about buying your first home, make sure to give me a quick call, or you can always email me at jeanricher@jeanricher.com. Merci beaucoup et bonne journée.